in terms of how we look at the project and our investment thesis, we always try to see how projects and teams can have the ability to deliver the product solutions that have actually move the needle in the space, right? So we always try to understand what exactly the problem they're trying to solve. I know what's the kind of approach they can deliver the product.
What's going on, Cowboy? In this video, we have a special look into how venture capitalists think, act, and play in the crypto space. I've got a fantastic interview coming up with Charlie. He is the lead. He's the highest top of LucidBlue, a venture capitalist company that I've recently gotten connected with. They have done some amazing plays, invested in some early stage startups, something like Avalanche that yielded like a bajillion X and Seedify and all these other plays. And we want to know how these guys think, because you and me, I'm a lizard brain. Okay. I don't know nothing about nothing. I'm still learning in the crypto space, especially I'm a new investor, new into crypto. I'm only been in it as a year. So that might be longer than most people or some people, but I still consider myself a novice at this, and I can always learn, and I think you can learn too. My name is Aaron. I'm just a lizard brain cowboy, just always trying to learn. And if you want to learn with me, hit the subscribe button down below. Give me a like on this video if you like this kind of content. And let's meet this person, because you could go on YouTube, right? And you could watch all these YouTube videos, but I have no idea how these YouTubers are talking about new projects. They're usually shilled. They're paid shillers. They're just talking points, talking heads. It doesn't matter. And then I have to piece together all the real information, and I have to try to synthesize it. But why not just talk to someone who invests in early stage startup funds professionally, like handling a ton of money? How do they think? How do they pick apart, okay, what am I looking for? What am I not looking for? What will yield the best results? And what are the indicators to tell me that? And I want to know how they think about this macroeconomic environment, especially in this crazy world today. So I have LucidBlue's very own Charlie. Welcome to the channel, brother.
Thank you, Aaron. Thank you for having me.
Good to have you. Okay, Charlie, maybe just a bit of a background origin story for some of us. Where were you before you came into crypto? Did you always do the VC thing? And how did you find your way into crypto?
First of all, thank you very much, Aaron, for the invitation. Great to be on this show, and thank you for all the audience to have this conversation. Back to your question. So I'm always kind of being very entrepreneurial journey. Before my crypto career or journey per se, from before 2013, I had my startup in Amsterdam. Before my startup, I was working Disney for 2 years as exchange students, 2 years in Orlando in Disney World. And I had my master degree in behavioral finance in Amsterdam, spent 6 years over there. I had a kind of IoT industrial design startup in 2012 and 2013. That's how I get to know the startup scene in Europe. Actually, it was great, and I met a lot of founders, a lot of the tech entrepreneurs, and also investors. And after I sold my shares into my startup, and actually joined a tech accelerator called Rockstart. That's how I get to know a lot of the startup scene in very hands-on approach, helping entrepreneurs to speed up the process of the the venture journey, talking to a lot of the VCs, seeing a lot of pitching sessions, all kind of stuff. Went to the startup weekend, all these kind of events. And then I met some of the people who are organizing the Amsterdam Bitcoin meetup in 2013 in those interesting coffee shops in Amsterdam. It was kind of a Dutch way of cowboy, right? And that's how I get to know Bitcoin, the Bitcoin mining, proof of work, everything. And then I kind of just took the red pill, joined the rabbit hole, and the rest kind of the history in my crypto journey. Yeah.
Okay, so you had a startup, you sold your shares in that startup, and then you joined an accelerator, and you started to get to know the startups, the entrepreneurs in the VC scene, and then you went to a Bitcoin conference in 2017, and you just started down the rabbit hole in crypto. Oh, 13? 13? Yeah. They're Bitcoin.
Yeah. I've been in the crypto space for a while. Yeah.
Jeez Louise, that's a whole bunch of nerds out there, and so you are definitely an OG, because people in 2013 Bitcoin is like, I've seen those videos. There's like no one there. So bravo to you for getting in so early. Now, how did you start LucidBlue? Where did how do you even start a VC, and what did you do to do
right? It's been a lot of journey, before I started with LucidBlue. So I think I'm always kind of call myself like ecosystem builder in the Web3 space. So I think I wouldn't call myself full time joining as a career in crypto until 2017. Before that, I kind of helped the Ethereum community by following up Gavin Wood, who was a former CTO of Ethereum, who created the EVM, the yellow paper of Ethereum, and I translated a lot of those articles, into Chinese, and I actually kind of building a bridge between the East and West, and kind of being the kind of a pioneer in the space, doing the evangelism, right? The tech evangelism for Ethereum community. Later on was Polkadot. And I individually invested in Polkadot in the first round in 2017. In that first round, it was 35 cents. And we sold around at $40 in 2020. So that was kind of my first major investment. But that was I didn't even have like a investment fund, legal entity, all the documents, all this kind of setup as a team, as a VC fund back then. It was just literally I invested individually through my German friends. But by doing so, I get to know a lot of those and the early stage venture investment and so on. Signing deals with partners with the Web3 Foundation, and when they actually came over to China, and I was kind of the guy who actually understand them well, helped them actually interpret it, doing all these meetups, events. And when they talk to all these, tier one VCs like Longhash, Fumbushi, Hashkey, a bunch of other, crypto funds, I was actually the translator and get to know a lot of the deal access, especially the real alpha, meaning how much they invest, under what price, and when. And those are the real alpha, stuff, right? When we talk about alpha, those are the real alpha. I'm not even supposed to talk about this because I'm kind of also signed an NDA with them back then. Now it's kind of like not relevant anymore because it's so early stage. It's like a couple of years ago. Back to your question. How did I start the LucidBlue? I think I have this good skill set, and also I feel after a couple of years in the space, I was like, in 2020, I feel like okay, there's a lot of interesting project I know, a lot of interesting founders need help to scaling up in terms of go-to-market strategy, in terms of crypto strategy, in terms of how to talk to exchanges, market makers, and so on. And so we started actually doing kind of venture building slash venture investment, right? In a lot of the crypto projects, from Polkadot ecosystem project, also then to the DeFi project and so on. And then we were like, okay, let's talk to the crypto lawyer that we know in Singapore, and then we eventually ended up with having the BVI, the Cayman Island structure, and set up our LucidBlue fund. And it was like why we call it LucidBlue is Lucid is kind of interesting name, means you keep your mind clean and clear, right? Blue is actually, or we have all these kind of carbon blue, lucid blue, like this kind of focus on environmental friendly, sustainability, social impact kind of mission. I'm actually a global shaper member underneath the Davos Economic Forum as well, so I'm always have a soft side of caring about the environmental friendly sustainability on that. So that's why we call ourselves Lucid Blue. The venture side is very obvious. We mostly focus on early stage. Although this year we are also shifting gears to focusing on the fund of fund and the liquid token later stage as well. But yeah, I think in the last couple of years before 2020, we had over 100 deals now in our portfolio, mostly focused on early stage VC venture, venture investment. Yeah.
Okay, so maybe I could get a little granular there. So you worked for Polkadot, right? Or was
Yeah.
that what was your role there? Because you were into these bigger.
Polkadot, yeah, I've been helping a lot of the multiple layer ones, right? Like Polkadot last year was Tezos and Polygon as well. For Polkadot, I was never actually an official, let's say, head of something. I was kind of being just an investor, ecosystem builder, kind of almost like a ambassador per se.
Gotcha. So
Right.
you
Tezos and Polygon, I was kind of a official head of China and head of South Asia for them.
okay? So you're head of Southeast Asia, China, Tezos, and Polygon, and you were an ambassador for Polkadot. But that experience locked you in with some of these bigger venture capitalists, like these alpha players.
Yeah.
Sign these NDAs and stuff like that. And then from there, you got a lot of that knowledge from how they move. And then you took that knowledge and you created LucidBlue, clear mind, environmental, kind of embodies a lot of those core principles of yours. Okay. And then you mentioned your 100 deals. Tell me, what was some of your biggest ones? I already mentioned a few of them. People could go to your website, lucidblueventures.com.
Yeah.
But yeah, tell me some of those things, and then we could get into like how you thought through these things. So like, what's some of your
Sure.
portfolio here?
In our portfolio, category wise, we invest in DeFi. We have quite some of NFT protocols. We invest in metaverse infrastructure. Last year, we also had a pretty big gaming year. We invest in some of the GameFi, blockchain gaming projects as well. And this year, we saw some of interesting kind of social fi or interesting on-chain analysis kind of tooling projects as well. And I think, well, one of the biggest deal we invested in is Polkadot. I think, right? That's kind of the infrastructure project per se. One of the most famous kind of metaverse project we invest in is RCT AI that focus on multi-chain, metaverse, infrastructure as well. And we recently invested in quite a few other very exciting, high potential metaverse infrastructure project like MetaZone, CypherMod, Bastion. Some of them we co-invested with A16Z, Cephemian, Paradigm. Some of the very big name VC funds in the space.
Mm-hmm.
Also Animoca brands, and that are very active in the NFT and the gaming side. Yeah, and I myself is a big gamer, so I saw a lot of those kind of gaming content projects. I believe I kind of have a very interesting taste and insight how to read through the team and understand their product journey and the roadmap. And in terms of how we look at the project and our investment thesis, we always trying to see how projects and teams can have the ability to deliver the product solutions that are actually move the needle in the space, right? So we always try to understand what exactly the problem they're trying to solve. I know what's the kind of approach they can deliver the product, right? What's the kind of the tech roadmap? Who's actually delivering the go-to-market strategy, right? Who's actually building the community and so on. I myself is a community builder and an ecosystem builder, right? So I will kind of just compare the notes and try to see the practice, right? The best practice from the team. If somebody actually know knowledge and so on.
Yeah.
And of course, at the end of the day, we look at the vesting schedule, the valuation, some of the terms, right, for investment. But also, I think more importantly, we look at how we can help and support the projects, right? When we invest in them, we barely invest in any project. We just do passive financial investment. We try to always explore the synergy strategically, how we can help the projects. Kind of, I wouldn't say holding hands, spoon feeding, right? Otherwise, that's kind of not going to be a good sign. But definitely try to empower the founders, right? And speed up their process. How to accelerate their business. From our resources, from our knowledge and help, right? And we always try to say LucidBlue as a fund, together with my partners Steve and Michael and some other venture partners in our fund, we have access to both the Web 2 and the Web 3, and in terms of knowledge and resources, and also we have good strong network in Asia, and also good network in America and Europe as well. We're well-rounded, supportive fund in the space.
Okay,
Yeah.
so there was a lot of really good information there, and for someone like me who's a brand new investor, like especially I don't before crypto I never invested in startups, and so now I'm investing in startups. I want to break down these 4 solutions that I took notes on, just for anyone else reading. You said the first thing you said was we take a look at teams. If what the problem is they're trying to solve, and whether or not they could deliver and execute a solution to that particular problem. So it's a deep understanding of the problem they're trying to solve, the solution, the proposed solution, and the ability to execute said solution. So you have to probably know a little bit about the team to know about the ability to deliver. And so you're probably interviewing or whatever you do. I'd like to go into that a little bit. So that's the first thing, is problem solution. Second thing you said was execution. The third thing you said was vesting schedule, because you want to see the return on things. And the fourth thing you said was how can we add value, or how can we synergize here? So typically,
Right.
I think that's a different mentality from like a cowboy like me who's brand new in the space. And I'm thinking, okay, how will this go up? Will this go down? Like that's not the frame. This is a different framework from how I used to think, or how I currently think sometimes. I'm like, okay, oh yeah, this is going to pop off. Everyone's going to get excited about it. You're thinking about it as, okay, problem solution, delivery execution, vesting schedule, and then what can I add? How can I make sure that this is going to pop off. I thought that was very interesting. I think anyone who's watching this should really take notes on that. I have some questions here. For me, when I look at new projects, I go to the website. I look over the website. I try to reverse image search the pictures if they have the. I take notes. Are they docs? Are they not docs? What does like? I try to read the contract. I go in the Discord channels and I see if things are authentic.
Mm-hmm.
That's pretty much the
Mm.
extent. And then I think about, okay, what's the problem? What's the solution here? How does this all work? That's pretty much the
Right.
extent of my research. Do you do
Right.
anything more than that? Like, do you call these people up? Do you have interviews with people? Like, what is your
Mm-hmm.
in-depth research process like? And how can I emulate
Right.
that?
First of all, I think by being in the space kind of forever, at least 80% of my career is in the space. I kind of know a lot of people. I wouldn't say everybody, but know a lot of people. A lot of well-connected people can provide me interesting third-party reviews, feedbacks in multiple angles as well. I don't just take one person's feedback about something and a certain team for granted. I want to have different opinions from other people and kind of counterbalance, right? And see something I don't know. And of course, although I'm Asian, we're supposed to be kind of indirect, kind of Confucius culture, but I learned my way in the Netherlands, kind of Dutch culture, to go very straight and straightforward. Just kind of having multiple conversation with founders, kind of eye to eye to the founder. You know, do you feel like you have enough what you got to deliver that, right? When we talk about the competitor analysis, right? Do you think you guys have better than your competitor, right? In terms of approach, in terms of resource, in terms of capability, and many other things. We sometimes even trying to do our own landscape analysis because, for example, if we invest in NFT lending, that niche we found at least 5 projects. We eventually only pick one team we invested in, and actually we seeded their investment and bring a lot of investors for that project. That team actually eventually get approval from Ethereum Foundation for the ERC 4907. That's their NFT lending, asset lending and leasing protocol. Before the other 4 projects. So I don't know how to say that. It's like you need to find a lot of ways to getting the alpha. The space is so small. Having just briefly checking, the social media, Discord, LinkedIn, sometimes actually not enough because first of all, some of the early stage projects they don't necessarily have very strong, well-rounded social media presence yet when they are very very early stage, and maybe some of them very techy, right? They're not actually very good marketing people, right? And so you don't have too much not information you can see from those kind of website, right? And then to be honest, and I actually invested in a tool actually doing the AI on chain and off chain and analytical stuff, looking at people's social media. They said to me, and I believe in those data with also AI engine they run, 85% of the social media channels and a lot of the accounts
Bots.
in the space are fake. With bots, with watch trading or whatever you call it, right? You can buy paid ads, getting hundreds of likes and retweets, everything, and to give you this feeling it's a hyped project with a lot of the users or community followers or fans, which actually are not true, right? So just looking at the numbers in those Discord channel or feed, or how to say, uh, you know, how to say the tweets, right, are not necessarily enough or sufficient. And at the end of the day, investment is really about risk management, right? You look at the timing, you look at the price point that you get in, right? For early stage venture fund, it's really about valuation as well. No matter how great they are, if the valuation doesn't make sense, especially right now we're kind of in the bear run compared to last year, we're much in the bear run. The position you enter is very very important. All that, right, to justify the risk return factor. So risk management in the crypto space is very very important. When everybody's talking about do your own research, it's really about risk management,
Got it.
right, and so on. So it's a very high return, high risk space So we at the end of the day, we need to look at that.
Got
Yeah.
it. So, yeah, you dropped even more knowledge on me. I'd like to break that down just for anyone who's listening. You said that looking at the social channels is not enough because one, there's these bots and fake accounts. I think we all kind of get that feeling. But two, I thought that was very interesting. Is you said that early stage startup people are very techie minded and not marketing minded, and so getting a feed on their social channels might not be a fair look at them because they're more techie minded than not marketing minded. So it might not give you enough information or even a polished look if you're just looking at their marketing channels. So I thought that was very interesting. And then you listed out three things you did that I personally, it's very difficult for me to do. At least two of these things. When you're interviewing these projects, one, you have an eye to eye conversation. Very like you see, which is why I love AMAs. Like you get that feeling from somebody, and you ask them like, hey, you just ask them questions and you get a good feeling from them. Two
Yeah.
is the network. Like you said, you know a ton of people in the small space, and you want that third party counter opinion to weigh your opinions about this. So it's like I said this for a very long time on the channel. One of the things I wanted was a big network around me, a bunch of people around me to kind of like bounce ideas. I think it's one of the best things a crypto investor can do in this space. So that's two, the network. And three, you try to look at the landscape of things. So like you were talking about NFTs and talking about like the bear market versus a bull market and all this kind of stuff. So you take a general landscape picture of everything, and then that's how you create your valuation of them. And so it's more risk management, yes, but more as like, okay, what's this valuation of this company, and how do I manage that risk, and doing your research. That's what the research leads to.
You are such a great, you can summarize everything such a great way. Oh my God, I'm so
Oh
impressed.
well, no, I mean I'm learning from you. You know what I'm saying? So I'm like I said, I'm taking notes here, baby.
You're learning
I feel
master.
like people should take
Wow.
notes on this, and so I think that's really interesting. So one thing that I'm very curious about here is like, how do people? How are we supposed to like take Lucid Blue? Do you take people's money? I don't even know how a VC works. Like, do you
Hmm.
have people in your community and you raise funds, and so you have people
Right.
send money? I don't even know how it works.
Right.
So
Yeah, so let me give you the rundown of how our structure of a fund. So our founder one, we started by literally bootstrapping with our own money, and by having some good returns on some of our initial investment, right? Especially like Polkadot. We received some LP, strategic LP money individually. One of our LPs was very important position as an investment director in one of the biggest oil company in the world. I'm not supposed to disclose the company name, but literally the one of the very important oil company in the world. So probably you can know who they are. Like it's like everybody knows that kind of
okay,
name. And then a few other LPs that are in the Web 2 space that are interested in coming Web 3. So in our fund one, we don't necessarily had too many institutional LP investors and coming, and so it's more like a very flexible kind of 2 year plus 2 year kind of venture fund, and we had a great return around 300 750%, weighted our average returns last year alone. And we then multiply with a lot of accumulated return values comes down. We had around 50 million AUM right now fund one. That's the LucidBlue fund one.
really
And
quick.
then we
Sorry, Charlie.
see.
AUM
Yeah.
stands for assets under management for anyone who's listening. So just I want to make sure everyone's talking on the same
Yeah.
wavelength.
Yeah. Yes. Yeah, thank you for the explanation. Yeah. And yeah, I do actually need to talk more in the layman term.
I'm lizard brain,
And
Charlie. I'm lizard brain here. So
That's great. That's great. Yeah, we just kind of closing and establishing our fund two as well. We have a new name called AMG Cat Crypto. We are having an interesting new strategy focused on liquid token and growth stage projects, and also investing in top tier VC funds in the space. So we already kind of invested in Pantera as LP, one of the major LP as well, and we're talking to a lot of other major tier one VCs that we haven't come close yet, so I cannot really tell the names. But basically, by doing so, we have access to a lot of even stronger deal flow in the space, and I kind of be the interesting counterparty with strong deep pockets, access to the community in the Asia for a lot of tier one VCs in America or Europe. And I hope in the next, let's say, 5 years, we can stay a good position in Asia for a lot of the strong players in the space as well. And we're still going to do a lot of the early stage venture deals in the founder one. But I think we're taking our time to see a lot of co-founders meeting kind of a lot of people. The ratio of our investment will be kind of like 50 or even 60 or 80 projects per investment deal. So literally, when we want to pull a trigger to invest to write a check to some projects, we literally need to meet maybe 60 projects or 80 projects. And we have to say a lot of no's to people to be selective. Because last year, we know we had also made some mistakes. We invested in some projects, maybe not the best in the space. Yeah.
Okay, so
Those are the mistakes people make, and we have to learn from that.
So this
Yeah.
is how a VC works. If I could sum it up for myself, you talk to these. You're like you say, you're community building. I kind of understand now what you mean by that. Is you talk to these people who want to pour money into the space, tier one VCs, people moving from Web 2 to Web 3. Yeah, at first you bootstrapped your own money, but now you're talking to people and you're connecting people to. You're grabbing relationships with these VCs. Not grabbing, that's the wrong terminology. But you're meeting people and you're dealing. You're building out a trust relationship with them. And then you've got a deal flow pipeline of new projects coming at you all the time, far exceeding 80 deals. And you have to say no to a whole bunch of them to reach your quota of 60 to 80 deals, so that you take that money and you pair it up with only the best high percentage chance these projects that are outlining a problem and a solution and the delivery method. And then you're pairing those two up. Is that about it?
Yeah, yeah. On our fund one, we don't necessarily have very high fees per se. It's a normal standardized 2% management fee with 20% carry. It's like a standardized setup of a venture fund, and 2 years plus 2 years. And we want to stay agile for our investors. And actually, to be honest, our fund one is mostly our own money. It's kind of just like a high quality. We try to be the high quality agile boutique venture fund in our fund one. But back kind of to back up something more, I was talking about our fund two, right? Fund two is more on the growth stage, and also fund of fund, meaning we also received some money and to gather as a pool for our fund two, which is bigger asset under management, and we deploy those capital into other top VC funds in the space like Pantera, and we maybe wants to access to their deal flow for co-investment. That's what we are doing for our fund two, because we believe our access to fund deal flows or top entrepreneurs is not enough. It is not strong enough and wide enough in the space. We're not the biggest name in the space. Our fund two can help to really reach out to more people and actually reach out to higher level of people as well.
Okay, so you're just reiterating like that network, more people, higher quality people, higher level, like the tier one as you call them.
Yeah.
I'd like to talk about two last major big concepts before we kind of close out this interview, but I think they're very important. And here are the two.
Great.
And we could tackle the last one first. So we'll talk. What do investors like me do to like? What do you think? What is some advice for someone like me or anyone else who's listening? But before that, I'd like to talk about the macroeconomic space.
Mm-hmm.
Like, how is everything in the world, this war in Russia, Ukraine, the Fed hiking, the inflation, all this stuff, right? Maybe food shortage, maybe all these shortages, unemployment, all that kind of stuff. How does that? What are your thoughts on the macroeconomic environment, and how should we think of it as investors? So first, the macroeconomic from a venture capitalist, early stage startup fund. Should we be sitting out of the market? I want to know all that kind of stuff. How are you thinking?
Sure. Rationally, as an investor, as a businessman, right now is a time which is very volatile. We need to be careful about risk management, treasury management, fund management, whatever we call it, right? Being too exposed on the space, especially with high leverage, is very risky. Recently, we saw, all this crazy crash, right? With Luna, with Three Arrow, with Celsius, all that, right? It's just very mismanagement and over leveraging themselves, right? It's just all these data points are already there in the space, so we have to learn from all these major events in the space. Macro level, I think we are in the period of Fed increasing their interest rate, decrease the CPI, the inflation rate, all that. My by that meaning the money supply of total, in macro level is gonna goes down, right? I think accumulatively they're gonna shrink around $5 trillion in the entire balance sheet in Fed. That means a lot of money will goes, shrink, right? Goes not in the circulation supply in the whole entire fiat world. That have very big correlation to the crypto world as well. The reason, last 2 years crypto, had at least 100x in a lot of the niches, right? Bitcoin went over to the all-time high, surpassed the previous all-time high in 2017, was because the money supply went up so much, right? The quantitative easing, everything, just a tremendous amount of money from traditional, world, from the institutional money come in through the trust like Grayscale, through a lot of traditional other ways, or compliant way, even non-compliant way with OTC deals, coming into crypto, right? Buying Bitcoin, buying all the kind of fiat, stable coins, sorry, and also buying a lot of the venture projects as well, right? So we're in this space right now, especially in the next 6 months. We need to be careful to buy the dip. A lot of people bought a dip, but actually it was not a dip at all. It was just in middle, right? When a lot of people saying, "Oh, they should buy the dip of Luna," guess what? There's another 99% down. So the risk is still always there. And if we talk about fundamentals, and wearing my kind of ecosystem Web3 builder nerdy hat, right? Potentially I have a virtual hat here, right? Because I'm always looking at the GitHubs, how the developer community is doing and so on, following all this developer conferences. While I was just watching the whole videos about ECC in Paris as well. I have a bunch of friends went there. This year is going to be interesting year. In the next couple of weeks, we're going to see Ethereum move from proof of work to proof of stake. It's a major shift on the consensus algorithm in Ethereum. Ethereum being the second biggest public blockchain in the world with most adoption space. When they shifted to proof of stake with much lower gas fee, much scalable model, and actually shifting the dynamics between miners, now the miners have to shift to the staker, right? Putting the Ethereum into staking, that kind of model. It's a lot of shift in terms of who is getting all the block rewards every single second, right? Maybe every seconds, right? Kind of that kind of stuff. So it's very important to see what are the players actually keep benefiting even more. What are the players actually losing the benefits, right? Cannot really mine anymore. Those money shifting, reallocating or redistribution has a very interesting dynamics in the space. So, and we saw all these new layer one infrastructure like Polygon, which I was working on as head of Asia, Avalanche, Solana, Near, and the new protocols like Aptos, Sol, right? All these are kind of coming out as well. We are going to see all these guys trying to find a way to still compete with Ethereum. And everybody cannot really deny affect Ethereum as one of the oldest and most robust public chain and most decentralized public chain, still the biggest chain in the space, right? So how to compete with them, how to coexist with them, right? What's their edge, right? And all this layer one are all very important infrastructure in the space, because all this adoption project we call it NFT, DeFi, gaming, metaverse, all these adoption projects have to build on top of them, right? And it's multi-chain anyway. Like I've been talking to so many adoption projects. They are all multi-chain, meaning they can build on Ethereum, they can build on Solana, Avalanche, many other chains at the same time. You're not, all these adoption projects are not just slave on one chain. They're not stuck in one chain. It's all kind of multi-chain model now.
Gotcha.
So it's going to be very interesting to see what kind of other fundamental new projects kind of come in the space can bring the next 100 million users in the space, even 100 billion users, right? That's what excites me, to be honest, as a venture investor. And I'm always keep all this fundamental side and the macro side at the same time to see where the new money come from, where the new user come from. Why is this project, with this product can capture those value, can be the next really, really big deal.
So
right?
so you're saying you're taking fundamentals and macroeconomics, and you're weighing those two together when you're looking at a macroeconomic landscape. And you said that you're anticipating $5 trillion to be drained from total dollars in the world from the Fed. And so all that's going to, some of that's going to affect crypto space, but you're also taking fundamental layer ones. So, and you're anticipating like, what's the new one coming out, and what are these existing ones doing? So it was really three prong, right? It was looking at the biggest one, Ethereum, and how it's moving to proof of stake, looking at its competitors and how they're going to compete with Ethereum, and then number three, looking at the new ones that you don't even know about right now, and how it's capturing it and bringing in new money and bringing in new users. And so you're taking those two ideas, a loss of money, and especially risky times, you know what I mean? Like, and no leverage, or at least, very leverage is very risky. And you're taking those two and
Yeah.
you're marrying them together. And that's
In our investment approach, we don't take leverage. We always do spots, and we don't actually do leverage trading. It's not we're not a hedge fund or high leveraged kind of yield farming
Got
kind of
it.
funds. It's not
Got
our
it. Okay.
approach.
So
Yeah.
now that we have the macroeconomic, how you're looking at the world, last question. What does someone like me do, right? Like, what is the best play for me?
Hmm.
Do you think Ethereum is going to run up? Do you think I should invest in these competitors? Do you think I should be looking at these smaller, riskier plays? Should I sit out of the market? Like, if you were to give me and maybe someone else listening to this, like, we're nobodies. We're a little fish in a big pond. What do you think I should do? Not financial advice, obviously, but a friend to friend, what would you do if you were me?
Yeah, it's always like financial advice, right? But I think not talking about investment per se directly, but what we should do definitely is keep an eye on all these macro news, right? When the Fed will release the new interest rate news, that's a major, one of the biggest signaling effect in the market, right? The whole economic market, right? Global financial market, and look at all this on-chain data, you know, using some of our tools to track all this data in terms of chain analysis, right? The TVL, the token locked volume on Ethereum different chains. When you see the volume change quite a bit, you see all this, basically you're seeing all the big whales are moving the assets around, right? And you want to see the growth of the decrease on the unique daily active wallet numbers, right? Meaning how many people are using their wallet to trade on those chains, so on. So those are very important data points to see how active and how vibrating the ecosystem are right now. And basically those can actually tell you the signaling, right? Is this actually a very active space in this chain, and what's happening, right? And those numbers give you some kind of signal, kind of feeling what's going on. And of course, at the end of the day, if you want to invest in specific project, go through the process of fundamentals, team, what's happening, what's the news, maybe even trying to wait to talk to the team members, right? Getting some alpha, understand what's going on, and even checking if there's some really bad news, right? Of course, some of the bad news are really just FUD. Literally in the space, there's a lot of people get paid to do FUD. It's just absolutely toxic and crazy. Trying to decipher and filter them out as well. And at the end of the day, I would say stay in the game. We are in the bear round, but the greatest return and greatest projects actually always come in the bear round. Remember DeFi, when before DeFi was never actually our thing. In 2017, 2018, a lot of projects start actually building, including like Aave, Compound, Curve, all these great DeFi blue chip protocols built on Ethereum, now multi-chain right now, was building through the very bear round of 2018, when nobody give a kind of shit about them. Sorry about language, because they don't know, why they don't care. Who are you? What is decentralized finance? Come on, give me a break. The ICO crashed just already, right? So I don't think you're gonna make it. A lot of people said that to Compound's founder, Aave's founder as well at that time. No, a lot of people didn't trust them, didn't believe in them, right? And then a few of them actually stay along with them, actually had like 1,000x kind of returns throughout the years. Of course, it's very outlier type of level, but I think honestly, as an early stage venture fund investor, that's what we're looking for,
Gotcha.
right? And it's always kind of beautiful to see when nobody actually cared to learn, understand what they are or what they do. When the party was still very small,
Yep.
you were there. I think that's the most fulfilling kind of feeling and experience when you're looking back.
That's great. I outlined 4 things you said. You said number 1, the biggest signal is the Fed news with the rate hikes and stuff like that. Be glued to what the Fed does, because when the Fed moves, we don't fight the Fed is basically the statement there. Number 2, you said on-chain data, and you mentioned 3 signals there. TVL, total value locked, first one. Second one is volume, and third one is unique daily active users or unique daily active wallets. So I'm gonna have to learn how to do that. Third one you said was fundamental analysis. Some of the stuff we talked earlier, like the team and the news, bad and good, and trying to cipher through the bad and good news. And then you said the fourth one, stay in the game. And I love this quote: "The greatest projects come in the bear market." And it's one of those things where you come in and you stay through, and you're one of the very few. And then if it's a great project, it launches and it deserves its rightful place in the sun. So, Charlie, thank you so much for giving me a venture capitalist high level perspective on the market and how to invest. I know you're continuing to bridge this goal to be the bridge between the East and the West, and I think you're doing it as your community building, as you bring in new projects connecting to tier 1 VCs. So I really appreciate that, and we're always looking towards LucidBlue and what you guys are going to do and what you're doing in the space. So. Yeah.
Thank you, Aaron. Thank you very much for having me this interview.
Thank you, guys. If you want to check out LucidBlue and what they're up to and all their portfolio, links down in the description. Charlie, thanks so much for being here. If you like this interview, hit subscribe, hit like, join their channels as well, and we'll see you in the next video. Thanks.